Good morning, everybody. Happy Monday. It's September 9th, 5:25 a.m. Central Time. Grain markets are mixed this morning. Pretty quiet overnight trade. December corn futures down 1 at 405 and a quarter. November soybeans up 4 and 3/4 at 1009 and 3/4. December Chicago wheat down 2 and a quarter at 564 and 3/4. December Kansas City wheat unchanged at 577 and a half. December spring wheat is down 2 and 3/4 at 611. Let's start off with Friday's rejection.
So, corn and soybean futures rejected fresh highs on Friday. The December 24 corn contract traded as high as 416 per bushel prior to a close near 406. The November 24 soybean contract traded as high as 1031 per bushel prior to a close near 1005. The market had rallied following first notice day in late September amid reduced farmer selling, late August U.S. heat, and concern regarding drought in Brazil. In addition, USDA has reported some stronger export sales activity in recent weeks.
The rally stalled. It's stalled. Is it over? We don't know that yet. I wouldn't be shocked if farmer selling was the culprit here. We've got the old crop situation largely behind us, the stuff we talked about a couple weeks ago with first notice day. But now we're getting closer to the gut slot of Midwest harvest, and you've got a farmer or producer who is believed to be undersold. And a lot of people don't have a game plan when it comes to these unpriced bushels at harvest. What do I do here? We've got big carries in the market. We've got interest rates that we're not interested in dealing with necessarily. I think a lot of farmers kind of are going to look back at last year and say, man, the best decision would have been to price at harvest, kill these interest payments, and be done with it. And I don't know if that's going to be the right decision this year. This year could be totally different. But there are a lot of farmer-owned new crop bushels that will be harvested that need to be priced, and maybe the farmer's taking this as an opportunity. You still do have some friendly items out here, so I'm not going to say that the rally is totally dead. We've still got some issues with weather in Brazil. We'll get to that in a second. There's some better demand on the export front that we've seen, so there are some positives still that you can talk about.
Fund traders have trimmed their net short positions in the corn and soybean markets. CFTC released weekly commitment of traders data on Friday. During the week ending September 3rd, the funds were net buyers of 61,000 contracts of corn. Fund traders have now covered nearly half of what had been a record net short position in the corn market. Funds were also net buyers of 21,000 contracts of soybeans, and funds were net buyers of 11,000 contracts of SRW wheat on the week.
All right, let's go back to corn real quick. So the net short in the corn market that the funds held back in July was a record 356,000, and they've almost cut it in half. They're net short 188,000 as of last Tuesday, according to CFTC. This is incredibly interesting because the market from its late August low to last week's high rallied, 31 cents? You got a 31-cent rally in a really pretty short period of time, despite the fact that's all you got, despite the fact the funds covered half of their net short. And that speaks to, again, the farmer selling that is out there and needs to be done. If you look at the CFTC producer category, they've added net shorts like every week the last couple of weeks. So the funds, again, played this thing very, very well. They were selling and adding shorts when the market was higher, and now they've covered half of their net short, very close to the low. To go back to soybeans, that's still a very hefty net short position. The short in SRW wheat is what I would call more of a modest net short position.
So if you guys have not checked out our premium content, you sure need to do so. Joe, can you tell me about a couple videos from last week?
Absolutely fantastic stuff with Pete Meyer on Thursday last week. I called it the best mailbag ever. So I asked subscribers to send in their questions about grain markets, grain marketing, and specifically Pete's bread and butter is biofuels, SAF, the 45Z stuff, renewable diesel, carbon sequestration, that sort of stuff. So it's 57 minutes uncut, no commercials, no breaks. We talked for 57 minutes about this stuff. I think that this is very important for you guys to be aware of because I think the information regarding biofuels and the big shift that's underway is scattered and kind of tough to digest sometimes. It's just there's a lot of irons in the fire. We got down to some really specific stuff, like this specific plant in this specific location is doing what specifically to try to make this happen. It was very, very interesting stuff with Pete. So if you're a farmer, this applies to you. If you're a banker, this applies to you. If you're selling seed, this applies to you. If you manage an elevator, it applies to you. This stuff is changing like in real time here, and you got to keep up to date. I also did a quick wheat marketing review last week. Anytime I advise a cash sale, whether it's corn, soybeans, wheat, I'll do a video and I'll explain my logic. I'll kind of explain myself and say, this is the logic behind this sale. And then I'll tell you what my fill price was. I'll tell you what my previous sales were. We'll talk about total percentage sold and the weighted averages, all of that stuff. It's a super easy to follow cash grain marketing strategy. If you guys want to see the premium stuff, go to standardgrain.com. You can subscribe this morning. This is a $50 per month subscription. Cancel at any time, no other fee, no other obligation. Nobody will try to sell you anything else. I will forward you a copy of this morning's email if you sign up today, and that includes the 6 most recent premium videos, that video with Pete, and also the wheat marketing video.
Water levels on the Mississippi River are unlikely to improve despite this week's tropical storm. The National Hurricane Center has identified the disturbance in the Gulf of Mexico as a potential tropical storm 6. The system is likely to result in heavy rains over the Gulf Coast and southeastern U.S. Southern areas of the Mississippi River Valley may see 3 to 5 inches of rain later this week, although government forecasts suggest that river levels will continue to decline. Rainfall in central and northern River Valley areas would result in improvement. Most of these areas are likely to remain dry.
Yeah, so there's going to be a ton of rain here in the southern River Valley areas and even as far north as Illinois and Indiana, but it looks like it's going to be maybe a little bit too far east of the River Valley. That could change, though. And if this thing shifts just a little bit, it could dump a ton of rain in these northern or central River Valley areas, which would help the situation. But for the moment, the government projection for river levels at Memphis is to remain restrictive and actually get worse through the 23rd. So we're not seeing any improvement here. This is a big deal for soybeans in particular. Post-harvest immediately is when we ship most of our soybeans out of the United States. And this situation is already making U.S. soybeans less competitive on the export market because it's just more expensive to ship them down the river with these restrictions. So something that bears watching, and it's not a good situation at all.
New crop U.S. corn export commitments were strong last week. Net corn sales exceeded pre-report expectations at 72 million bushels. The print was up 22% compared to the prior week. Mexico was the largest corn buyer for the week. Net soybean sales were reported at 61 million bushels. The print was down 37% versus the previous week. China was the largest buyer for the week. Net wheat sales were near the lower end of expectations at 12 million bushels. The print was down 36% from the previous week and down 17% from the prior 4-week average. Leeward and Windward Islands were the largest wheat buyer for the week.
I don't know where that is, admittedly. Let's go back to old crop real quick. So you saw a bunch of cancellations and stuff, and that's totally normal because we're wrapping up the marketing year. What is interesting, and not interesting, what's bad is when you look at where we're going to end up with regard to the old crop soybean export program, the marketing year that just ended. It's going to, in all likelihood, end up being the worst U.S. export program since the 12-13 marketing year. And 12-13 was only that bad because we had a drought and we had no crop to export, or not a substantial amount of crop to export. Now you're in a different situation where the export program was poor because Brazil has become a monster exporter and that sort of thing. And then we're using more soybeans domestically via this expanded crush program. So soybean exports, just the old crop program was bad, and prospects are looking better. I mean, we've seen some better weeks of export sales. It's still the second worst program of the last 10 years and the worst since 2019, which was the trade war. But you're pretty close, actually, to some of these other recent years. So I'm not going to say it's a total disaster anymore, whereas back in early August, it looked very bad. New crop corn sales actually look pretty good. I mean, if you throw out 2020 and 2021, you'd look really good. Those were 2 years that were associated with a lot of Chinese buying, and that's why this is kind of skewed. But the new crop book of corn sales is pretty good. China just has been totally absent.
Brazil's soybean production could increase significantly this season. According to a Reuters poll, the crop is estimated at 168 million metric tons, a 14% increase compared to last season. The projection comes despite Brazil facing record drought conditions. Forecasts, however, are indicating that rain will begin in October. Soybean futures sank to their lowest level in nearly 4 years last month, but recent concerns about hot and dry weather affecting the U.S. crop have boosted prices. The USDA is projecting this season's Brazilian soybean crop at 169 million metric tons.
So I guess that some of the long-term forecasts indicate that rains return, but you guys know as well as anybody that anything past 5 or 6 days is not reliable. This is the 10-day Euro for Brazil, and there is no rain in central soybean areas. The only places you're going to see rain is in the south. And then even the extended GFS, which is 16 days out through the 25th, same thing, very dry. So while some of these longer term forecasters, maybe they have reason to believe that rains return in October, I see no tangible evidence right now. And again, it would be abnormal if the rains didn't return. What's normal is that the rains return in late September, early October. You get into the wet season. It would be very abnormal if the rains did not return. I'm just not seeing it in the forecast right now. So I think the trade is absolutely watching this for sure.
12 U.S. lawmakers allege that Chinese agriculture drones pose a threat to U.S. security. The lawmakers claim that DJI agricultural spray drones could carry out an attack in the U.S. The lawmakers are requesting immediate action be taken to reduce the risk of Chinese drones to the U.S. ag industry. DJI claims that it has no ties to the Chinese military. The lawmakers contend that the Commerce Department has export restrictions on aerosol dispensing drones that have the potential to deliver weapons. The U.S. imposed export restrictions on DJI back in 2020. However, the company still accounts for more than 50% of all U.S. drone purchases.
Yeah, so I guess when I looked at this, my thought was, well, if China's not making the drones, who's making them? I mean,
Right.
We don't make electronics here, so I don't know how you get around this. This was the first I've heard of this, and I don't know if you guys are watching and you look at if you have a drone, if you're looking at this, see who makes it. Is it made by this DJI? I don't know. Interesting stuff.
At a rally in Wisconsin over the weekend, Donald Trump announced plans to impose a 100% tariff on countries that shift away from the U.S. dollar. According to Trump, the dollar has been under major siege for 8 years. Last year, China, India, Brazil, Russia, and South Africa discussed de-dollarization. Although its dominance has weakened, the U.S. dollar still made up 59% of official foreign exchange reserves during the first quarter of this year. Meanwhile, the Biden administration is overdue to announce its final decision regarding steep increases on existing tariffs on Chinese EVs, batteries, semiconductors, and solar cells.
They should really, and did you read through this whole article? Did they mention the Biden stuff at all?
No, they did not.
Okay, so if you're going to mention the Trump plan to tariff China, you also have to mention in the same breath what Biden is doing. And this was out at the end of August. It was August 30th. So back in May, the Biden administration made this decision that they were going to hike duties on a whole bunch of stuff from China. They were going to raise tariffs basically on EVs to 100%, 50% on semiconductors and solar cells, 25% on lithium-ion batteries, key minerals, steel, aluminum, ship-to-shore cranes, syringes, all sorts of stuff. It was supposed to take effect on August 1st, and then on July 30th, they delayed the implementation of all of this, and we could see an announcement any day. Like there's an announcement imminent here. Part of this is political, and this Reuters piece that was out at the end of August would indicate as much. Here's a quote. Whether to ease the tariffs is the administration's first major trade decision since Vice President Harris emerged as the Democratic Party's presidential nominee after President Biden stepped aside in late July. So this is going to draw criticism, I think, from some people on the right, perhaps, that, they're going easy on China if they don't follow through with this. But just make no mistake, you've got China tariffs in the works from both sides of the aisle, and we have no idea how it's actually going to play out. So I don't know which one is good or bad or indifferent. It's just you've got tariff stuff on both sides for sure. What did cattle do last week?
Cattle futures had another dreadful day on Friday. Live cattle were down $1.65 to $2.07 lower. Feeders were down $2.82 to $4.05 lower. Cash cattle trade was slow last week and lower. In the Texas Panhandle, cattle sold at $181, which was $2 lower compared to the previous week. In Kansas, cattle also sold at $181, which was $1 to $2 lower. Up here in Nebraska, cattle were $4 lower at $180, and then over in the Western Corn Belt, cattle were steady to $5 lower at $180 to $183. Box beef was lower on Friday. Choice ended the day at $309.41. That was down $2.10. And Select ended the day at $296.12. That was down 66 cents.
Outside markets, a little bit of movement this morning. U.S. dollar is higher. The stocks are attempting a recovery. The S&P is up 38. The Dow Jones is up 240. Bonds are off. Gold's about flat. Crude oil is up 42 cents. And the October WTI 68.09 last trade. Have a great day, guys. I will talk to you on Tuesday.